On today's hot sheet, I'm discussing the downturn in job expectations. It's continuing, the increase in home builder layoffs, and a new record for U.S. housing market value. Today is Tuesday, September 9, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Connecticut. Let me know in the live chat where you're tuning in from, wherever you may be. The Hot Sheet's the only live housing show on the internet that runs daily, Monday through Thursday, when the markets are open. Subscribe down below. It's the free, simple way to support what we're doing here at BAM. Share the Hot Sheet with a real estate housing professional, somebody in or within reach of the industry that should have access to this information, and somebody that you care about, by the way. All right, let's get into it here. We're continuing to talk jobs. It's the biggest thing hovering over the economy. It's the biggest thing that is hovering over the future of rates. It's all in the conversation right now. And we're going to get a big moment next week when Jerome Powell puts out the FOMC's prepared statements on their decision, whether it be cutting 25 basis points or 50 basis points. Polymarket actually this morning, maybe people are just getting sick of betting on the NFL already, and there's more money flowing into Polymarket. The 50 basis point bet has moved up since yesterday at 18%. So there's some momentum happening there. Still, the majority of the money is on 25 basis point cut happening next week. But the market's going to be watching what the Fed says. How concerned are they, Jerome J. Powell, on labor? Okay, is the concern enough where they're going to come out and say, yeah, we're cutting and multiple cuts throughout the year? That's what the market is looking for. And that's going to be one of the big deciders on what happens with rates. It's not the cut coming next week that's going to impact the 10-year and the 30-year. We got that thing priced in. Next week is in the price. It's baked. The cake is done. Okay. You can take it out of the oven, put the frosting on it. The future is what's important. Okay, what's the conversation going to be Wednesday afternoon into Thursday morning next week when the Fed makes that decision? What are the words specifically that Powell mentions? Right now, the feeling continues to brew up to a almost boiling point that, hey, consumers are worried about the job market. People looking for jobs are worried about the job market. The businesses are saying we're not hiring as much. So the expectations are the Fed will take a significant stance next week. New York, Federal Reserve Bank of New York Center for Microeconomic Data. What a title. They released their August 2025 survey of consumer expectations. This was just released yesterday. Rear view mirror back to these consumer data points that they collected in August. Okay, so the month we just came out of, so recent data. All right, there are some findings that cover inflation, the labor market, and household finance. As we kick off here with their findings in labor, okay, the top headline is that worker confidence has hit a record low in this New York Fed survey. Okay, so the record low was surprising because we've seen other times, like I talked about it yesterday, like, hey, we're at 4.3% unemployment. We could go to 4.5. I got no issues with unemployment being at 4.5 when you look at historical numbers. We got about 7 million plus job openings. We got about 7 million. To me, there's obviously concerns, and it's certainly hard to find the job of choice, but not everybody gets choice. Sometimes you have a season of sucking it up, Buttercup. But To me, the labor market it's been strong, and I know it's weakening. There's some warning signals, but to me, boy, having a survey that is a record low was surprising. Okay, now the survey's history dates back to June 2013. Well, 2013, we weren't out of the woods yet. We were starting to feel like we were out of the woods from the GFC, but there was still, let's look. Let me just pull up 2013. So we had this yesterday. So I'll just go to yesterday's data here. All the data from each show gets put into school, so you can always grab that. If you're a BAMX member, upload that stuff daily. Let me just jump in here and look at 2013 on unemployment, specifically. What did we say? June is when this data goes back. So unemployment, June of 2013 was 7.5%. But yet this survey, the data goes back to that point, and you had multiple years. 2014, 6.7%. 2014, 2015, 5%. Unemployment was high until we got on 2016, we didn't hit a 4 handle on unemployment. So there was multiple years after the recovery where unemployment was high. The unemployment years, they called them. Okay. And that survey that the New York Fed does has hit now a record low. It never was lower during those times. I find that interesting. Okay. So the median 1 year ahead earnings growth expectations fell by 0.1 percentage point, 2.5% in August. So 1 year ahead, how do you feel about your next year of earnings? Okay, that fell 1/10 of a percentage point. That remained below its 12-month trailing average of 2.8%. The series has been moving within the range between 2.5 and 3% since May 2021. So expectations on earnings growth hasn't changed all that much from the last 3-4 years. Median unemployment expectations, or the mean probability that the U.S. unemployment rate will be higher 1 year from now. That increased by 1.7 percentage points. Okay, so that's up to 39.1%, and it's above its 12-month trailing average. The mean perceived probability of losing one's job in the next 12 months ticked up by 0.1 percentage point to 14.5%. The reading is above the 12-month trailing average of 14%. Okay. How about the mean of probability of leaving one's job voluntarily in the next 12 months? It decreased by 0.1 percentage point to 18.9. The mean perceived probability of finding a job if one's current job was lost fell markedly by 5.8% points to 44.9. Okay, so this is the one. Probability of finding a job if one's current job was lost. That fell 5.8 percentage points, 44.9, the lowest reading since the start of the series in June 2013. Now, you would think in 2013, when unemployment's at 7.5%, if you ask somebody, hey, if you lost your job, you think you're going to go out and get another one, that it would be lower than today's metric. We're at 4.3% unemployment. There's 7 million job openings out there. But that's not the case. Now, the job market's tricky. Some of these job markets can be, unemployment can be a little hard to define. If you look at true unemployment, I think it's probably even a little bit higher than what they're reporting today. So there's an argument to be made there. But if you're an employer right now, you understand what I'm about to say. The job market is funny. You can put out a position right now and get a multitude of applicants. Okay, probably more applicants you'll receive right now for any particular job position. Video editor, we have a video editor position out right now. Or, we've just on the team here in Connecticut, we've hired in the last few months a new administrative position, a listing coordinator position, a new ISA, a recruiter. The job the job applicants flood in. But what is as you pick through those, and most good employers are going to say, hey, if it's a video editing position, hey, can you edit a clip and send it back to me? And like the response rate of like a simple task is like less than 25%. Like people apply for jobs right now and then just, take days to get back. Oh, sorry, missed that email. It's like, yeah, I'll never hire you if you missed an email. When it's like you're looking for a job and it took 3 days to respond. I'll never hire you if you can't fulfill a simple homework task as part of the interview process. I'll never hire you if you can't figure out how to get your camera on Zoom. It's 2025, okay? But people struggle with like common everyday things, and it's not everybody, but there's just a lot of people applying for jobs that are not accountable to really finding a job. What does that sound like? So the labor market's funny. You got to kind of sift through some of that stuff. And some of these anecdotal points they're just relevant when you're factoring in the entire labor market right now. And we'll see what Jerome Powell says. But consumers' expectation is like, man, I want to keep my job because if I had to go out there and look right now, I'm not confident I'd find something better. That's what they're saying. And or maybe it's just hey, don't want to go out there and compete for that position, knowing there's a lot of applicants. Okay, what does New York Fed survey say about inflation? Median inflation expectations ticked up by 0.1 percentage point to 3.2. So that's not a huge move with all the uncertainty. Jay Powell's favorite word. Median inflation uncertainty, or the uncertainty expressed regarding future inflation outcomes, increased at the 1 and 3 year ahead horizons and declined on the 5 year ahead horizon. Median home growth expectations remain unchanged for the third consecutive month at 3%. Median year ahead commodity price expectations declined by 0.9% percentage point for the cost of college to 7.8%. Well, geez, I mean, I don't know, Haley, would you agree with that? Cost of college? Yeah. It's going to go down? No. Yeah. So I would disagree with that. I don't think it's going to go down either. Household finance. The median expected growth in household income remained unchanged for the consecutive month at 2.9. Median household spending growth expectations increased by 0.1 percentage point to 5. And perceptions of credit access compared to a year ago improved, with a smaller share of households reporting it's harder to get credit. Okay. Here's an interesting one. Median year ahead expected growth in government debt declined by 2.5 percentage points to 6.6%. Haven't seen the government remove debt yet, or the thirst for it, but we'll see. Finding job expectations. Here's the chart. This is the big news out of the 3 categories that were covered. And it's that not only is now we're getting multiple months of hard data of bad labor news, but the feeling of employees, of consumers, the expectations are down to 2020 levels, and it's actually at the lowest level since 2013. A lot of, how the economy moves, the investments into it, the spending habits, all come down to a feel, okay? A gut feel, just kind of a sense of the market from consumers. And so this is stacking up now to, a very important conversation that Jay Powell is going to have with us next week. I think this one would be even more important for Jay Powell to pay attention to. Home builders, according to Lance Lambert over at Resi Club, friend of the Knowledge Brokers Pod, which, by the way, you should check out Knowledge Brokers Pod. It's on a separate channel, yes. But if you're not listening, we do it every Friday, me, Tom, and Lisa. And we cover maybe 1 or 2 of the major hot sheet topics, but then get very tactical. So if you're an agent, broker, team leader, that kind of stuff, bring on guests once in a while. We do it every single Friday. Lance has come on a few times. So we have economic guests, that type of thing, CEO level guests, and Lance, friend of the Knowledge Brokers Pod. But he put out this just a couple of days ago. Homebuilder layoffs rise. So we've seen this now starting to tick up, and now the hard data is hard to ignore. Okay. Florida and Texas, where they build, baby, build, they're laying off. Okay. Pricing power is slipping. They've got to report to Wall Street and they need to make a move. Okay. Residential building construction employment down 3,800 jobs from its cycle high, while residential contractors are down 44,000 jobs. Now, Lance is saying it's not a big pullback, but it does mark this softening is real. Okay. John Burns Research and Consulting says the share of home builders reporting layoffs among peers in local housing markets. 87% say yes in Texas, 79% say yes in Florida. And once you start the layoffs, sometimes it's like, oh, I can get done a little bit more with less. You kind of get addicted to that cost savings. Okay. I could tell you from experience, like, oh, Haley can be as productive as two people if we put a little AI over into the video. Haley's laughing right now. Haley can account for three if we just give her the tools necessary. You kind of like, ooh, that's a nice thing for the bottom line, for the P&L. Makes Haley more valuable. So comp time, she'll probably remind me of that conversation. Play this clip for me. But listen, Texas and Florida, once you get going, builders, on just kind of, laying off and you can get the same work done, why not? You got to report in and you got to maximize profits. Northern Cal, 75%. Nationally, the number's at 63%. Let's look regionally. Southwest, 63, Southeast, 62. The lowest of the regions is the Northeast, 35%. But guess what? They don't build there and they have the lowest inventory. So they're not a relevant player in the conversation. I'm looking at the West. I'm looking at the Southwest. I'm looking at the Southeast. I'm looking at the Sunbelt states when I'm looking at this data, because when you see residential construction employment start to drop off, which it's doing right now ever so slightly, when it drops off, what do you see come next? These gray bars aren't an aesthetic. They're a recession. And so as we're experiencing the beginning of a drop-off in U.S. residential construction employment, we're getting closer to the R word becoming at the top of every headline. Now, I've said this before, the market isn't buying into recession. We're talking NASDAQ yesterday, another all-time. I mean, all-time highs. So they're plowing money in, believing that, hey, the Supreme Court's going to uphold these trade deals. If they don't, could be as much of $1 trillion loss for, a give back here for the, I saw a headline there. Don't know if that's even accurate. It was on CNBC. Don't shoot the messenger. I'll find it so people don't think I'm going crazy here. I'm just going to find that real quick. CNBC. Yeah, it's at the top of the page. The potential Trump tariff refund bill could top $1 trillion, a refund. But now the Supreme Court's going to decide on that. Now, what we know about the markets is the market kind of liked those trade deals. Okay. Once they got a little taste for that sweet income, they're like, ooh, we like it. We saw the stock market go all-time highs. The investors kind of believe right now, like, yeah, there's some warning flags on labor, but that's going to push rates down and the economy is going to continue to be very resilient going into 2026, maybe even a boom year in 2026. So those are the bets that investors are making right now. That being said, you get a few more months of this with, residential specialty trade contractors looking even worse than the building construction employment. It says the same thing every time it drops down. This drop right now is a little bit sharper than the building construction employment. The specialty trade contractors are first to go. You get these dips every time it follows. So we'll see. We'll see what happens here in the next coming months. We'll see if these rates kind of alleviate some of that pressure. That's what's happening right now for builders and contractors, which is a leading indicator to the rest of the employment market. Move is on you, Jay Powell, next week. Okay. Zillow just put out a press release. This is straight from the media room. Okay. U.S. housing market reaches record $55.1 trillion. New York, the center of it all, leads all states with $216 billion in annual gains. Florida and California, they see a loss stacking up. Okay. States with the largest shifts in total market value. New York leading $216 billion, Jersey $101 billion, Illinois $89 billion. Okay, look at the three largest states there. California takes an L of $106 billion. Texas takes an L of $32 billion. They've been stacking up L's for a couple of years, so a little bit smaller than Florida and Texas, or a lot smaller right now. Florida takes a decline here of $109 billion, leading with the biggest decline, $3 billion ahead of California on real estate value, according to Zillow. That $55.1 trillion, though, is a record. Okay, so hey, the stock market or the housing market is crashing. Goodbye housing. Really? Record $55.1 trillion. If you're a real estate professional, you are in the center of it all. I mean, for everyone that thinks there's going to be a 40% haircut, a 30% haircut on U.S. home values, they're basically saying the U.S. economy is going to go away. Remember, it should have gone away during the great financial crisis. The only time you saw drops anywhere like that in the last 100 years as it comes to housing. You never, in the history of houses, okay, you never saw that, okay? When there was cavemen, you didn't see caves lose that much in value. Shelter's important. In America, baby, it's land, it's building, it's owning it. And the value's at $55.1 trillion. 40% of those homeowners don't have a mortgage. They don't have to play ball. They don't have to sell. If you're at 3, 4, even 5%, what's the pressure to give a buyer a deal? There's other ways to donate to charity. Okay, $55.1 trillion. It's a massive $20 trillion jump since the eve of the pandemic. According to the Zillow analysis, growth has slowed in the past year, but listen, you're not going to get that $20 trillion back, buyers. You're just not. And I think the more you can educate buyers on the reality of trying to negotiate a one-off deal with a particular seller, and that's a more viable solution. Okay, 10 most valuable metro areas: New York City, of course, LA, San Francisco, Boston, DC, Miami, Chicago, Seattle, San Diego, and San Jose. Look at the total market value in billions. I mean, you're not going to see a lot of homeowners just give up that value. There's no reason to, nor should they. States, California is still at the top despite their loss there. New York, Florida, Jersey, Massachusetts, Washington, Pennsylvania, Illinois, North Carolina. You got to go down. Where is it? Did I miss it? Oh no, they're 5. Texas is 5. Okay. Jersey, Mass, Washington, Pennsylvania, Illinois, North Carolina. So Virginia's next. There's your value right now equation, $55.1 trillion. It's a record with all things going on. Real estate's still incredibly valuable. If you jump into BAMX members know where to find this. It's my favorite chart. Go into the hot sheet classroom where I release all of the day's charts and notes and information for you to easily access. But if you just jump into my most popular favorite picks here, And we actually have templates for you to use in there that you can use. But this one here, this is my favorite. Hey, the last 4 decades, even when we had a great financial crisis, you gained 47.3% on your real estate. Real estate does one thing. It goes up. It continues in value. And housing has become unaffordable. It was unaffordable at this moment too. And then it kept going up. The 2010s, it went up 44%. So far in the 2020s, we're up 40 something percent. Like it just rips. And when you print as much money as we printed the last 4 years, it's going to keep ripping. Okay. It might top out and you might see some small percentage point declines in certain areas, but on the whole, this value continues to grow. What else is there really in life to buy? Okay. Could buy some more Bitcoin, but that'll be a personal decision. 30-year fix hit a new fresh year-to-date low yesterday at 6.28. 6.29 was the closeout at the end of the week last week. We're starting the day here with a 10-year at 4.059. We did not get to a 3 handle yesterday. We're at the lowest point in the last 3 months. 4.059 is where we're starting the day. There's one place to be come tomorrow with me at 3 p.m. Eastern, and that's on a free webinar, totally free to everyone. Tomorrow, 3 p.m., 12 Pacific time, how to dominate Google and AI search. We're doing live search ranking audits for agents. Okay, so how to make sure all those different places that you show up on Google, number one, that you are showing up. Number two, you're showing up in the right way. And then number three, that when chat starts to feed a consumer information asking for the questions that's relevant to their search, that they're pulling from Google, because that's where they're pulling from a lot of this stuff on the internet. They're pulling from Google with your name on it. Okay, if your name is on it, you're not getting in position. We're going to cover that tomorrow, 3 p.m. Eastern. Haley will put the link down below. Free webinar for all tomorrow, 3 p.m. Eastern. Looking forward to seeing you on there. Have a great Tuesday. See you back here tomorrow morning. Until then, of course, toodaloo.